All right, welcome to The Explainer. Today, we're going to try and make sense of a market that's sending some seriously mixed signals. We're going to look at why Bitcoin traders are getting nervous, how gold is caught in this massive tug-of-war, and, whether stocks can still pull off that classic year-end Santa rally. So, you know that little burst of optimism we got after the whole US government shutdown threat went away? Well, it looks like that party's over, at least for now. Both crypto and stocks have kind of hit a wall, and that initial spark just fizzled out. So the real question is, what's the data actually telling us about where we go from here?
Okay, let's kick things off with Bitcoin. Now, on the surface, the price seems pretty stable, right? But if you dig a little deeper, the professional traders are flashing some serious warning signs. The real story isn't the price you see, it's what's happening behind the scenes.
So what's going on here? Why are the pros getting cold feet? Well, to get the real story, we've got to peek behind the curtain into the derivatives market. This is where the big players place their bets, and it gives us this incredible window into what they're really thinking, way beyond all the daily price chatter.
And when you look at the data, it's pretty clear why they're hesitating. We're seeing a bunch of indicators all pointing in the same direction, and it's not a bullish one. For instance, the futures premium, that's how much extra traders will pay for Bitcoin in the future, is below the neutral level. That means demand is weak. Then you have the option skew, which tells us there's more demand for bearish put options. Even the funding rate is low, so retail traders aren't exactly piling in. Altogether, it paints a really clear picture of skepticism.
Here's a big reason for all that caution. $270 million. That's how much got wiped out in leveraged long positions just last week. Ouch. When something like that happens, it makes even the most confident traders take a step back and think twice.
Okay, so if Bitcoin's all about caution, gold is a whole different beast. It's a story of a massive conflict. You have two gigantic groups of players looking at the exact same asset and coming to completely opposite conclusions. It's fascinating.
And here it is in black and white. On one side, you've got the big money asset managers, and they are dumping gold like crazy. We're talking a record $7.5 billion flowing out. But then, on the complete opposite side of the ring, you have central banks, and they're buying it up at a record pace in dollar terms. This is a classic tug-of-war for control of the market.
All right, so Bitcoin's nervous, gold's conflicted, but what about the big one, the S&P 500? Well, despite the recent slowdown, you've got Goldman Sachs out here making a pretty strong case that we could still get that classic year-end Santa rally. They're not giving up on it yet.
Basically, they're saying, hey, don't panic. They think this recent dip is just a little blip, some short-term noise. In their view, the underlying fundamentals, the money flowing into U.S. stocks, still look really strong and constructive.
And they're not just guessing. They've laid out 5 solid reasons why they're optimistic. They're looking at things like healthy market internals, those strong fund flows we mentioned, the fact that historically, November and December are great for stocks, and, of course, absolutely massive corporate buybacks. Each one of these is a pretty powerful force on its own. And speaking of those flows, just look at this. The amount of money pouring into global stock funds literally jumped from $17 billion to $29 billion in just 1 week. That is a ton of buying power coming into the market, providing some major support.
And here's another huge piece of the puzzle: corporate buybacks. We're talking a 13% increase from last year, hitting an insane $1.25 trillion so far. With almost every company in the S&P 500 now in their buyback window, that's like a constant, massive tailwind for the market.
Okay, so let's take a step back and put all these pieces together. We've got 3 huge, important assets, and each one is telling us something a little different about where the market is and maybe where it's headed.
And this table really sums it all up perfectly, right? For Bitcoin, the pros are skeptical. For gold, it's a total battleground, completely conflicted. And for the S&P 500, well, that's where we're seeing some cautious optimism for a strong finish to the year.
So that's the big question we're left with, isn't it? With crypto looking nervous and gold caught in this massive tug-of-war, is the optimism in the stock market strong enough to win out and carry us into the new year? If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.